Good morning, everyone, and thank you for joining us this morning for our BEIS public sector launch event today. It's great to see so many of you on the line. We're running the session this morning to tell you a little bit more about BEIS and to answer your questions throughout the session. So we will be taking questions through the Q&A function. You'll see this on the right-hand side of your screen, and we hope to be able to answer these in a number of breaks throughout the event today. But if we're not able to answer them, we will respond to you separately. If you would like to find out a bit more about BEIS, please visit our website. The link is on your screen in front of you. I'm delighted to be joined by some great speakers today. We have John Saunders from BEIS, Ken Honeysett from Triple Point, George Robinson also from BEIS, and Richard Turner and Neil Rutledge from Amberside. The timings on your screen are flexible. It depends on the questions that we get through today. But we wanted to set out enough time to allow us to run through the presentation today and speak to you about the scheme. So I will firstly hand over to John.
Hi, thanks, Sam, and welcome everyone to this session. It's going to be, I think, really interesting to hear all about the progress so far on heat networks, but also specifically around BEIS. And my main role, I think, is just to kind of set the scene and give the kind of the context for the launch of BEIS. Really set the platform for the great range of speakers that we've got. So my name is John Saunders. I'm Project Director for Heat Networks within the Department of Business, Energy and Industrial Strategy, and have broad responsibility across all of our support. So many of you will be familiar already with the net zero agenda. It's gone up and up in the public consciousness over the last several months. But for us, we've been working to net zero specifically for at least 2 or 3 years now. I think it was 2017 when it was first talked about and signed into legislation in 2019. So what that means for us is by 2050 we need to be a net zero economy, and to get there we've got a series of challenging areas to focus on. We've made great inroads into decarbonisation of the power sector, and we're starting to make those same inroads into transportation. Many of you have seen the accelerated rollout of EVs and the infrastructure that's associated with it. One of the big areas where we still need to go much further, much faster, is decarbonisation of heating. And there's some numbers that just kind of indicate the size of that challenge. We've got 43% of our energy use used for heating in some way, shape or form. And it's roughly drives around 1/3 of our carbon emissions. And so the success of net zero is really built around our ability to address heating in homes, businesses, industry across the piece. And so when we talk about this challenge, we think about ways in which we can decarbonise heating, and we can look at electrification, we can look at low carbon gases, hydrogen, for example, other low carbon gases in the gas network. But actually an area that we've been focusing on for several years now is the role that heat networks can play on their own and in tandem with those different decarbonisation pathways. And so for, I guess, last 7-8 years, we've been supporting the market, supporting project developers to try and develop heat networks and deliver them at the scale and pace that's going to be required to keep us on track. So in terms of heat networks and the kind of contribution they can make to net zero, it's sizable. The Committee on Climate Change talks about 18% of heat coming from heat networks by 2050. And in their latest reports talk about an investment requirement of somewhere around 17 billion by 2030. Right now we've got around 3% of UK heating being met through heat delivered by heat networks, and regardless of whether the number's 15, 18, 20% of heat, 3 is a lot lower. So we've got an awful lot of opportunity and investment required to keep us on track and to deliver that meaningful contribution to net zero. So clearly where we've got to is some investment, some growth in the market. We'll hear more about some of the work we've done to date to promote that and to accelerate it, but there's still going to be a major investment requirement. And so that got us looking at the way that the market works right now, the way that these projects are typically funded, and a realization that we probably weren't going to do it if we just depended on the sort of local authorities that were investing at that time, the small number of, albeit very large, energy services companies or big energy providers, and some new build housing developers. That was essentially the kind of state of the market as was, because if we're looking at 17 billion by 2030 or 20 to 30 billion by 2050, we really need to find alternative ways of financing these heat networks and unlocking some of these large scale sources of capital that are available to us. So that's kind of where we started, and we've been working for some time to facilitate that. One of the challenges that we faced was that heat networks were economic but not necessarily commercially viable, and so you'll hear more from Ken in the following minutes around the role of the Heat Network Investment Project and how that's catalysed investment. But really it was around thinking about where are these other sources of investment and how can they bring value to projects, and really it was around how they can be active rather than passive investors and really help bring forward projects and investment as opposed to just bringing money. So we listened to concern from the public sector, what was stopping them, and the things that were often cited was around procurement. So how do we get this finance? How do we bring it into our projects? Around the mechanism, how do we do this efficiently? We've not brought this type of funding in before, and is there a market for it? Who's going to be interested, and what are they going to bring? And we also heard concerns from the investment community. Are the numbers big enough for us? Numbers of projects or size of projects? What's the timing? What's the timing for the projects coming forward, being developed, being delivered, and what's it going to cost us to engage? And so that started to really form the kind of bulk of our work over the last few years. So some of it has been around the standardisation of projects, the size and scale of them, through HNIP bringing forward standard contract sets, understanding investment requirements, so that the projects and the market can talk to one another, ensuring we've got visibility of this pipeline of information, pipeline of projects, and this flow going to the market. But actually, crucially, and the reason we're here today, is really thinking about that route to market, and that's where BEIS comes in. So, for us, this is a really important way to facilitate public sector and the investment community coming together and looking at alternative funding solutions that we haven't seen to date in the market, but that we're absolutely going to need over the next 5, 10, 15 years. And the team's been working incredibly hard in working out how we set up a framework that meets the needs of both of those kind of two parties, the kind of broader public sector who have the projects and the investment community who want to invest in them. So we recognise that we're going to continue to support heat network projects over the remainder of the decade. Again, you'll hear a little bit about the role of the Heat Network Investment Project, but I also think that the work that we're doing to support heat networks through our Green Heat Network Fund and as part of our Heat Network Transformation Programme is going to be really important in giving that long-term certainty. So I was going to spend just a moment longer kind of outlining that before I bring Ken in to talk about the kind of more detailed stuff. So yeah, from our perspective, these are long-term infrastructure projects. They do take time to develop, and they're really important to us as government in delivering our net zero commitments. So we want to give a consistent policy and support landscape, yeah, not just for the next year, couple of years, but actually for the decade. So we've got our heat network investment project, which is due to close out with its final funding rounds this year, and then our Green Heat Network Fund comes into being in 2022 through to 2025, and that's our new capital grant scheme, looking to move the market on again, from deployment of some of the most exciting heat network projects to some of the most exciting low carbon heat network projects, and looking to unlock some of these large scale low carbon sources of heat that we're most excited about, the things that we might hear on the news about, heat from energy from waste plants or mine water or the underground. We also recognise that there's some other stuff happening that's going to better enable us to deliver heat networks in the future. So thinking about how we help existing heat networks, legacy heat networks, improve. And so not only will that allow us to unlock these low carbon sources of heat, but also improve the consumer experience whilst at the same time saving energy and carbon. And of course, to deliver all of this, we need the skills and the robust supply chain that's capable of doing so. So looking at a skills programme across the first half of the decade that's providing the resource into the supply chain for this future growth. Many of you will be aware that we can't live on just grants in a kind of sustainable marketplace. So also thinking about how this creates the conditions for alternative levers in the second half of the decade. So things like regulation, which we're looking to bring in next year, which will enhance the consumer protections available to the market. Continue to unlock investment through ensuring that heat networks have the same statutory rights and powers as other types of energy infrastructure, and also thinking about how we enshrine decarbonisation as a critical part of building heat networks in the UK. For some time, we've been looking at addressing the return side of heat networks. Does it give my return on investment as a sponsor or an investor? We also want to address the risk side, and so looking to consult this year on our heat network zoning policy, which essentially looks to try and create some conditions which guarantee connections to your networks as you build them out, so you can start making decisions from day one about the full extent of that network over time. And of course, thinking about the rest of the support that's required in order to deliver heat networks throughout the 2020s. So hopefully that gives you some kind of context, where this has come from, where we've got to, and what our plans are for the future, and sort of better enables you to kind of clearly understand BEIS and why we think it's so important, so exciting, and we hope a really useful addition to the marketplace. And on that note, I'll hand over to Ken.
Perfect. Thank you, John. Good morning, everyone. Thanks for joining us today. I'm Ken Honeysett from Triple Point, and I'm part of the team that's delivering the Heat Network Investment Project, or HNIP, on behalf of John and his colleagues at BEIS, and I'm super excited to be here today at this BEIS launch. So, HNIP launched back in October 2018 at the start of Green Great Britain Week, and it began funding projects the following January 2019. It's part of the government's major project portfolio, and from the pilot phase through to the main scheme closure in March 22, we'll seek to deploy £320 million of grants and soft loan funding into the commercialisation and construction phases of public, private and third sector heat network projects across England and Wales. The aim of the HNIP is to create the conditions for a self-sustaining heat network market. And that's to say one that won't require long-term government intervention. We've heard already from John that the Green Heat Network Fund will be following on from 2022. It's our very great hope that BEIS and initiatives like it will give it that self-sustaining target that we all aspire towards. It's going to do that ultimately by increasing the number of strategic, optimized low carbon heat networks, by improving the quality of heat network infrastructure already to meet consumer needs and the needs of local infrastructure, and by building the capability of project sponsors, but also of the supply chain. And it's going pretty well, dare I say it. Since the start of the pilot project, the scheme has already awarded more than £250 million of funding to more than 30 schemes. When built out, they'll deliver substantial volumes of decarbonised heat to almost 70,000 homes and save an average of 66,000 tonnes of CO2 equivalent annually. More than just money though, a self-sustaining market requires a degree of professionalisation, and BEIS asked us, as John mentioned, to create some entirely free, standardised sales, operations and maintenance contracts that are available to download from our website. I should have checked this, but I think it's www.tp-heatnetworks.org. They've been one of the great successes of HNIP, a core part of the original BEIS business case. We're absolutely thrilled to see their increasing usage in schemes already, schemes being commercialised and built out right now. And to hear the feedback from projects that they're saving time and money for all those involved. We've got our brilliant business development managers that provide valuable support to projects seeking funding through all stages of the application. We run webinars and networking events just like this one, some even in person back in the good old days, and maybe one day not so very far in the distant future as well. We do as much as we possibly can to showcase your projects in the media and on social media. And of course, the main reason why we're here today, we're doing as much as we can to encourage third-party investment into the sector. Why do BEIS want us to do all that? Well, as well as being part of the lowest cost pathway to net zero, heat networks have proven to be a great anchor strategy as part of the government's commitment to build back better from this horrible pandemic. Heat networks are a great driver of local and national economic growth, with the potential to draw in up to 22 billion of private investment by 2050, and while doing so, creating more than 80,000 jobs annually. And if they seem like huge numbers, and of course they are, the great news is the projects we've supported in the earlier rounds are already delivering on that commitment today. There's a scene here you can see from the middle of Leeds city centre. We were absolutely delighted to hear from the team at Leeds that their first phase of the scheme has already created jobs for 430 people in the city centre, including 36 apprentices among them. One of our first good news stories, but many more to follow soon, we hope. Why are we focused on private capital? Well, our public finances are in a pretty parlous state for reasons we read about every day in our newspapers. Public sector borrowing are at the very highest levels they've been since records began, and the infrastructure mechanisms that we've had in place previously, such as PFI, PF2, have long been since consigned to the scrap heap. Fortunately, the heat network market is more investable today than ever. Next slide, Slam, please. This is a slide I pinched from John and the BEIS team. This is one they usually use to address the investor community under the heading of "You said, we did." And as John mentioned, some of these are the changing characteristics of the investment landscape in the couple of short years just since HNIP has launched. We used to hear a lot that there's not enough projects out there, that this is too small a market. Well, we already have now a pipeline of projects just in England and Wales, just with our immediate orbit, that has got a £2 billion capex requirement. We hear a lot that all projects look different, but as I mentioned to you already, standardisation through the use of templated contracts and standardised due diligence is taking place right now. There have been question marks about the performance of heat networks in the past, but now we have a CIBSE code of practice, performance KPIs. There is ongoing optimisation work and technical standards in regulations. Another gripe was that projects are too small. Well, actually, we've seen the size of projects grow over the course of the last couple of years from an average of £12 million up to in excess of £20 million. The cost of due diligence is reducing as standardisation continues, but it is still an unregulated sector today. We hope too that will change in pretty short order with the recent announcement of Ofgem as a regulator to the sector. Returns have proven not to be high enough. Well, that's still true in very many instances. And of course, that's the rationale for first HNIP and then Green Heat Network Fund to provide that yield enhancement. And there's too much connection risk is perhaps another of the more often heard gripes. Well, yes, that's true. Again, it's something that we hope and expect will change. This time on the successful conclusion of the zoning framework that's being discussed right now. And lastly, well, there's no easy access to private capital, and that was definitively true, but only until today, only until the launch of BEIS. Next slide, Sam, please. So government's doing a lot of great things, but there's frankly a little bit more to do yet. Its job is not complete. It needs to continue to provide the national and international leadership that it's doing so. International leadership never more important than this year, with the eyes of the world on us as hosts of G7, and in particular as hosts of COP26 a little later on. It must continue to provide financial stimulus for the sector. We've told you about HNIP, we've told you too about the Green Heat Network Fund and the £10 million transition fund to GHNF that's very recently launched as well. But it's also introduced an incredibly expansive, extensive weight of unified, mutually reinforcing policy. Next slide, Sam, please. And this policy really kicked off in earnest at the end of last year. In a few short weeks, from the middle of November through to the middle of December, we saw the issuance of the Prime Minister's 10-point plan for his green industrial revolution, the National Infrastructure Strategy, which mentioned for the first time the launch of the UK's National Infrastructure Bank, a bank that opened its doors just last week. We had the CCC's 6th carbon budget, which was pretty chastening, actually, really pointed out the fact that very much of the heavy lifting on the road to net zero by 2050 needs to take place this decade. This, we think, is one of the great opportunities for the heat network sector. We saw the energy white paper, and we had the HM Treasury's interim net zero review as well. But there's more to come. We've got the heat and building strategy that we think is going to be later this year, and HMT's final net zero review too, plus, of course, things like the outcome of the zoning consultation that we mentioned to you. And if that's concentrating on the role of central government, then the role of local government, he says, noticing his typo there, for which, sorry, is every bit as important. And we're thrilled and very grateful that so many local authorities are here for us today. We have a growing panel of BEIS investors already onboarding who are convinced of the benefits of partnering with local authorities. Why? Well, local authorities are uniquely well placed to provide great political support and leadership, to encourage fantastic citizen buy-in. You're interested in all vectors of energy, not just heating, but transportation and power as well. You've got a mandate to encourage and drive local economic growth and have fantastic competencies in local services such as planning, service delivery, and of course procurement as well. And really importantly at BEIS to be a success, a demonstrable and proven willingness over the years to partner with the private sector. So in short, a really compelling, purposeful, impactful investment opportunity. Enormous potential. You remember the numbers John mentioned to you just a few moments ago. £17 billion worth of investment by 2030. This journey from 3% deployment up to 18%, 19%, who knows where it will end. An investment that presents an investment community with really strong environmental, social and governance hooks too. And in BEIS, a highly usable platform and a highly accessible panel of investors with proven experience, capacity and capability. What's not to love? You'll soon be hearing a little bit more about BEIS from my delivery partner colleagues at Amberside, from Richard Turner and from Neil Rutledge. But first, I'm thrilled to hand you over to George Robinson to talk about other routes available for funding a heat network. George is the BEIS lead on finance and commercial matters affecting heat networks at BEIS. Really importantly, he was also the lead on scheme design for the Green Heat Network Fund, about which I'm sure we'll hear a little bit more. Thanks for joining us, George. Over to you.
Thanks, Ken. Next slide, please, Sam. So just to build on what Ken said, I also lead on the Heat Network Delivery Unit, co-lead, and recently presented to a number of local authorities across the country about sort of routes to market for the Heat Network Delivery Unit funding. And for those of you who are not so aware of what we do in HNDU, that's the early stage funding for a kind of feasibility studies, getting projects to a point where they can start talking to investors. And a key part of this obviously is to what extent are the projects that we're helping develop kind of compatible with a kind of BEIS route to market from a financing perspective. And so currently in HNDU, if you look at those sort of two arrows at the top, the green arrows, what that's saying is we'll support projects to do what we class as full DPD or full project development, where what they are doing effectively is looking at all of the options that are kind of available to a local authority as prospective investor, or possibly just looking to sell their heat if they've got buildings, rather than trying to sort of own and operate a heat network. And also we're pushing forward a concession model. And if we go into the next slide, Sam, which is the one I'll mainly talk to, it's sort of just making sure to what extent do we think that BEIS is compatible with these sort of options that are being explored by HNDU, and how will BEIS sit side by side with the Green Heat Network Fund. So in terms of sort of BEIS compatibility with the Heat Network Delivery Unit's approach to sort of project development, early stage project development, I see BEIS as very kind of complementary to all of the options that we are putting forward. And there'll just be a bit more thought around, well, if they go down a concession route, what does that mean for BEIS? So I'll talk a bit more detail around that. But first, if we think about a kind of joint venture structure where the local authority effectively saying, OK, we do want to invest in the heat network, but we're looking to get investment from another party. Well, BEIS is clearly a very obvious route to market for that, and we're really excited about what that will bring in terms of kind of robust, competitive approach to securing third-party equity, or I believe asset finance. But Neil and Rich will talk about that later. Equally, if they want to be sort of have a sort of majority stake in a project sponsor ESCO, so they've incorporated a special purpose vehicle, capitalising that with their equity. Again, you could sort of very much see a BEIS route to market working very well there, competitively securing the other investor in that special purpose vehicle. And then we get on to sort of the concession route, which sort of from an HNDU perspective, we're quite keen on. And the reason we're quite keen on that is we can start to take a more outcomes-based approach to delivering heat networks without necessarily having to step fully through the sort of challenges of procuring a design, build, operate, maintain type contract, which I think is quite daunting for many local authorities, to be perfectly honest. Not all, and that's fantastic, but for some, equally for some, they simply might not have the capital or the risk appetite to invest. And so we're looking for options to make sure that they can still unlock the low carbon potential that a heat network can deliver, but still make sure that the strategic objectives of kind of a wider decarbonisation is in the mind of the concessionaire. And so having a kind of concession structure, we feel, and we're still in sort of exploratory stages of this, might fit well with just defining those objectives of low carbon decarbonisation, expansion potential, but equally understanding, you know, how tariffs will be structured, how they will escalate with time, just to make sure that it's fair, transparent, and open to kind of buildings within a given region. Also, personally feel that that kind of model could fit quite well with the kind of zoning kind of structure that was talked about by John earlier in terms of the policy framework of the future. So it's really important that we're clear, well, how will that fit with BEIS then? And one model that I think could work is that actually we could encourage local authorities who are thinking about going down the concession route to consider strongly about having a kind of competitive component of the funding that's going into the concession itself. So effectively, there's two components. There's the procurement, if you like, of the concession itself, but a provision within that procurement that a proportion of the funds will be competitively procured. And BEIS would be the obvious mechanism to effectively facilitate that competitive procurement of a company equity or asset finance into that project, that concession vehicle. So I think there are lots of ways that it can be done. I do feel all of the options that we're supporting are compatible with BEIS, and we're certainly not trying to sort of do anything that's in competition to it. And the Green Heat Network Fund, essentially it's grants only, so really would sit quite well with BEIS again. We are now offering as part of our scheme design, and you can see our scheme design guidance, detailed guidance is published on our website, .gov website. We talk about now being able to offer provisional awards, and I think that will be really important for BEIS as well. So effectively, a provisional Green Heat Network Fund award could be made, and it's provisional on the condition that finance is secured, sort of in writing, saying we commit effectively to take this project through commercialisation, and obviously still subject to final investment decision provisions, but we will work with the project to get to that point. Allows effectively a BEIS panel to understand what the post-intervention project returns are, rather than having to commit time and materials to the expectation that a award will be secured. They know it has been secured, subject to their effectively commitment to invest in the project, subject to obviously the outcomes of commercialisation. So I think that's really important. Actually, I think HNIP will really, I hope, support the activities of BEIS and work well together. And so that's what I really wanted to say. I think we're now moving into a kind of Q&A session. I can also answer questions on HNIP if that's of interest to people.
Thanks, George. So we've just had one question come through so far. So how does the newly opened UK Infrastructure Bank and BEIS interact? Are they complementary, and could we provide a comment on that? So,
want me to have a crack at that, and someone who knows things can correct me. So we're incredibly excited about UK Infrastructure Bank. It clearly meets a need to properly fund both the kind of net zero agenda, but also a range of other types of infrastructure that requires investment at pace. From our perspective, UKIB is still thinking through the products that they're going to use and the levers they're going to use to try and catalyse this investment. But we've been very clear that we think heat networks represent a good opportunity and should be within the mandate of the bank. They are able to issue equity, debt and guarantees. So we'll need to continue to think through those elements. But in my head, it feels like equity from UKIB might not be as beneficial as equity through sort of BEIS and through other routes. Coming back to this idea around an active versus a passive investor, and actually wanting this money to bring knowledge, experience in kind of helping get these projects developed, get through close, and then actually get them delivered. So in my head, there's a kind of HNIP or other government funding which generally just improves the economics of the projects. There's then a role for BEIS to bring in kind of the equity funding into these projects, and then UKIB and a range of other facilities to bring in long-term, low-cost debt products, and then hopefully what you've then got is a kind of fully funded project with probably a more competitive kind of cost of capital within there that meets the needs of the kind of different sponsors and investors within that project. So I think entirely complementary. Clearly, as I say, it's just been launched, so I know they're staffing up, and there's lots of people with massive brains thinking about how they can make a success of the bank, and we'll work hard to help them and think about how this all fits together.
And if you don't mind, Sam, just adding to what John said, the UK Infrastructure Bank is taking over the ability to issue debt at the local infrastructure rate. So we do know that North London Waste Authority was successful in securing £100 million of local infrastructure rate funding from PWLB funding at gilts plus 60. And some of that expenditure was supporting the development of the Meridian Heat Network in North London. And so it is quite clear that this is a sector that they're interested in investing on, because they're taking over the mandate that Treasury gave for that activity. So I think that's an encouraging step for UK IB's kind of involvement in the sector, I'd say.
Thanks, Neil. Does anyone else want to jump in on that? Nope. Okay, great. So just got another question here around so it's is it not the choice of the concessionaire to decide where they source funding that will make economic and financial sense to them? Would we not be overcomplicating the procurement by asking or including a requirement for the competitiveness of funding?
I think I might take that as a first step. So I agree, it would be complicating things, and I think at a project level they'd need to decide to what extent they thought it was necessary. So I'm not going to stand here and say that the concession route is the most compatible to BEIVE. It's the least compatible to BEIVE, but I still think there is a route that can be explored that would still include BEIVE in that model. And actually, as investors, so ultimately the kind of concessionaire, why not consider, bringing on effectively a partner involved, and why not competitively procure that? So it might not necessarily even be a provision of the concession procurement itself, but just a natural outcome of the investor. I think the fact that we've got a kind of panel of experienced investors who would sit well within these projects, it could be that the concession itself, without us having mandated it through the procurement of the concession, would consider such a route. So I think these options need to be worked through at a project level, and definitely feedback from kind of the investor community as to what would work best will be taken on board. These are just ideas at this stage.
So maybe I could just add. So we have seen examples of this in other sectors where concessions have been let, and there's been funding competitions for at least part of the investment. And what we've seen in those sectors is that often when people are bidding, the cost of the finance isn't necessarily the most competitive that's available, because you're procuring all elements of the concession together. Whereas if you can split out and compete some element of the financing, once you've done your main procurement for the concession, you can actually drive down the cost of capital. We've seen that be very effectively used in other sectors. You can retain an element of funding for the concessionaire and then compete, say, 75% of the remaining investment through BEIVE, and that just improves the overall economics and drives down that cost of capital. So we've seen it being done elsewhere, and it can be very effective.
Thanks, Richard. I think we'll move on to the rest of the presentation. There's a few questions that have come through specifically on BEIVE eligibility. So maybe if we move on to your presentation and we can pick those up afterwards.
Great. So morning, everyone. My name is Richard Turner. I'm a director at Amberside Advisors, a financial advisory firm that's focused on energy transition, and we're working with Triple Point and the other delivery partner members on HNIP, particularly focused on attracting private capital into the sector. So if we look at what BEIS is, it's firstly a PCR compliant procurement platform. It's actually a dynamic purchasing system, which some of you may be familiar with, but for those who aren't, it's got similarities to a framework, but there are some important differences. It's all done electronically. There's an online portal which is hosted, in our case, by ProContract, so everything in terms of the procurement, from onboarding suppliers to running competitions, is done through that online portal. Suppliers can join at any time, so it's not like a framework where there's a deadline for suppliers to join. It is contracts are awarded through a competition stage. There's no direct award of contracts, and the price and the outcome of that is determined for each project at that competition and contract award stage. And there's no limit to the number of suppliers can join, so as they can join over the lifetime and leave over the lifetime of the dynamic purchasing system. It's got a potential value of approximately £150 million, and it's been set up to allow public sector heat network owners and developers in England and Wales to procure both asset finance and equity investment related services for their heat network projects, and I'll talk a little bit more about that. It is separate from the Heat Network Investment Project, which you've heard about, but it's designed to work alongside both HNIP and, importantly, the Green Heat Network Fund when it comes online next year. The initial term of the BEIS is to March 23, but BEIS have the option to extend for 2 one-year terms, so in total up to 2 years. And BEIS is the administrative authority of Triple Point, manages the DPS as agent, and Amberside works Triple Point to manage it on a day-to-day basis. Next slide. So why have we established it? Well, you've already heard from John and Ken that the numbers in terms of investment are huge, 17 to 22 billion have been estimated. And we've also heard about future market development, in particular zoning, and that's got the potential to dramatically scale up both the size and number of district heating networks, and that will drive a big increase in funding requirement. Ken's talked about the public sector budgets being under pressure, constraints on public sector borrowing, and to achieve a self-sustaining market, one which no longer requires public sector support, is going to involve significant levels of private sector capital. We need to unlock that investment over time from industry sponsors, from investment funds, and eventually tap into the huge amounts of pension fund money that's available and keen to invest in the sector. So we're trying to make it easy through BEIS. We try to make a smaller number of commercial models. George has talked about concession, joint venture, and how BEIS can work alongside both. Standardising documentation, Ken's talked about. We've issued standardised due diligence set, which provides information on how investors look at projects, how they assess risk, and gives information for contracting authorities on how they can address those issues. And Neil's going to talk a little bit more about that later. So we hope all of those things will make it easier, speed up the process, reduce the costs of procurement. And we've seen in other markets how once you get standardisation, that can really drive significant efficiencies in the market. So who can use it? It's available to all public sector bodies in England and Wales, which includes central government departments, non-departmental public bodies, devolved administrations, obviously critically local authorities, who we've seen as being key drivers of growth in the sector, but also NHS bodies, universities, colleges, schools, and we've seen in HNIP a number of applications from those. And once zoning comes in, we'll start to see the importance of all those public sector bodies working together within zones. Very importantly, it's not just for new heat networks. So we see a very important driver for the market becoming self-sustaining is a maturing of the market where existing heat networks can raise new finance, refinance, raise and recycle capital. So for local authorities who've got mature networks, BEIS an opportunity to raise capital to recycle, so the local authority can recycle that capital either back into the project or into other for other uses, or to drive expansion of those existing heat networks to fund that expansion, and obviously to fund new heat networks. I mentioned the equity finance, but also skills, and that's really important part of BEIS. This is not just about the money. In fact, if it was just about the money, we might not have BEIS at all. Importantly, it's about being able to access development skills, structuring skills, investment skills that private sector investors can bring, and some local authorities have those skills and others don't. And we've, HNDU have been aware of a number of projects which are stalled because of a lack of those skill sets. So we think that's a very important part of BEIS. So just to summarise the benefits of BEIS. It's intended to be very easy to use for both the public sector and private sector, so to drive accessibility, efficient route for both the public sector and investors and asset funders to access opportunities. Flexible enough for contracting authorities to access a whole range of skills alongside the funding. Speeding up procurement and reducing costs through greater standardisation of commercial models, documentation and due diligence. And most importantly, from contracting authorities' perspective, deliver value for money solutions and cheap cost of capital. So we've been spending the time recently, which is the first stage of any DPS, which is onboarding suppliers, in this case, a range of investors and asset funders, and that includes industry sponsors, financial investors. So we're now launching and we'll be going live in July. And what does going live mean? That means that the DPS will be up and running and available for contracting authorities to run competitions for their projects. I talked a little bit about the services. The DPS is split into two lots, equity finance and asset finance. Lot one is the lot that covers the equity investment related services. And these are services, importantly, which are ancillary to that investment. We're not procuring through BEIS full design, construction operations or standalone professional services such as legal and finance. These are services that investors can bring to support the development of the heat network. Just a little bit more about what those services are. I won't go through them all, but they are services that will be important during the commercialisation stage. And we really want BEIS to be available to contracting authorities at all stages of commercialisation. So you could have a project at an earlier stage where you need a number of these skill sets, commercial structuring, support in procuring supply chain, managing third-party investors, agreeing commercial terms and the allocation of risk, managing due diligence, and importantly could include the raising of debt finance. So whilst BEIS isn't needed to raise debt finance, that could be part of what a third-party investor brings as part of its skill set. And then pre and post financial close, just on the next slide, Sam. A number of skills which are more related to the special purpose vehicle that gets set up, so management services, board directors, business plans, and value enhancement. So what will you need to do to prepare to run a competition? Well, for the lot one, for the equity investment side, produce an investment tender pack. That's a relatively short form document with the bid response requirements, evaluation criteria, an investment summary, and we've set out the bones of that investment summary in the customer guidance. So you can have a look at that, and we're available to help you work through that. And the project development agreement, which is again, there's a draft of that in the pack, which includes both the shares agreement and the development agreement, which will take you from appointment of your funder through to financial close of the project. For the asset finance tender pack, there's probably a shorter form bid response requirements and evaluation criteria, and then an asset finance term sheet. So you issue that to the market, and the process just set out on the next slide of how to run a competition. Again, this is in the customer guidance, so I won't run all through it, but it's effectively a one-shot competition process. where you can carry out pre-market engagement prior to the tender process. You then finalise the tender based on that pre-market engagement. If you want to run that, you issue the tender to all the relevant suppliers on the DPS. So anybody who's meets the criteria has the ability to bid. It allows for a clarification period for bidders and also for you as contracting authority. You then evaluate the bid and award your contract to your selected investor or asset funder. There's much more on this set out in the customer guidance, and on the next slide we've got links to that, but we're here to help. So Triple Point are via us managing the DPS as agent for BEIS. BEIS, we're onboarding suppliers, funders, but importantly we are here to help you understand the process, understand investor requirements, and understand and prepare and make ready to come to market. So we are there to work alongside you. We can explain what investors will need before you come to market and help you through the whole process. And we're very happy to arrange one-to-one sessions following this to talk you through in a bit more detail. So these are the funder guidance, further guidance links which are available to you, and also links to the standardised due diligence set. So I'm going to hand over now to Neil, who's going to talk a little bit more about that and how investors approach heat networks.
Thank you very much. Next slide please, Sam. So I think just wanted to touch on the strategic aspects of these projects. I mean, BEIS comes at a time of intense change in the investment landscape. Environmental, social and governance concerns are being prioritised by investors equally alongside the financial returns derived from projects. Ken spoke earlier around ESG. You know, we see very strong signals in the market for large sponsors as ESG becomes increasingly predominant for investors. And it's worth saying that local authorities are very strong attractors for ESG investors. You score well on G, you've got a very strong framework, clear legislative and ethical framework. And as a sector, you carry very little baggage. If the worst that could be said about local authorities, you have no authority here, Jackie Weaver, I don't think we've got too much to worry about. You are all about social, that's driven right through everything you do. So in a sense, authorities that are wanting to do environmental projects are really ticking all the boxes in a very authentic way and are a strong potential proposition. So the challenge, I think, is that investors come with their own interpretation of ESG, and the market has responded with a plethora of approaches, both to the investing side and the reporting side. But very broadly, there's a very strong parallel between what investors are looking for and what local authorities want to deliver. So we're seeing, increasing local authorities using the same framework, say for disclosure as investors are already doing, things like the Climate Disclosure Project. And we've got TCFD coming down the track, so the task force for financial disclosure of climate matters, and equally for natural capital matters. Those are things that are embedded in the in large parts of the investor community already. So there's an element for local authorities to get through that might be a little bit unfamiliar, but the broad territory is very similar. What investors want and what local authorities can provide. What we do see is that investors might have some specific measures that they have designed or want reported on that will be a tweak rather than anything fundamental. And so we in our work are often providing additional extras, and maybe it's around particular ways of reporting carbon, it's particular ways of reporting activity down the supply chain. But I think there are likely to be issues that the local authority will have given some consideration from. So tweaks at the margin. I've listed on the slide some of the different approaches that people are trying to meet. There are a variety, and we can help you talk through the detail if that's if you get particular questions. So moving on from strategy, the what is it investors are wanting to understand that we can address in the investment summary. Essentially, investors are providing capital that comes with a mandate, and that defines both the return required and the level of risk that they're willing to absorb. So they're really seeking to understand the nature of the investment, what are the risks associated, and they'll want to do due diligence on those risks to validate their analysis. As has been mentioned earlier, we've got a standardised due diligence set to minimise the effort involved in that. But we've listed here some of the high-level risks that are common to heat network projects that investors will want to understand. So in the guidance, we've set out in Annex 2 an investment summary template, which seeks to highlight the key elements of the project, the key elements of the investment, and through that help investors understand the risk that they will be facing. So next slide, please, Sam. Yeah, so that investment summary effectively is taking the role in sort of standard private sector investment. The first stage is a teaser goes out and interest gets expressed by investors, and that gets followed up by a detailed information memorandum. Sort of here, what we suggested here is an executive summary taking the role of the teaser, allow investors to get a sense of the project, whether it's likely to meet their requirements, and then the rest of the investment summary starts to go into the detail. So if we move on to the next slide, Sam, what's the executive summary doing? It's providing key information on the project, the timeline that you're working to, and what are the outline funding requirements and sources of funding available. That gives a base on which investors can understand more detail, and key to that will be the ownership structure, some of the issues that have been talked about earlier around different approaches to whether it's a sponsor ESCO, whether it's a JV, perhaps it's the financing element of a concession. There are other approaches. Investors will want to understand the sort of pre and post ownership structure, and a diagram speaks 1,000 words here. And they also want to understand the identity of counterparties. They'll have know your client requirements. They'll need to satisfy themselves properly around the identity. So that's a sort of a client's aspect, compliance aspect that would be important to be clear on the right stage. Moving on, Sam, the next stage is around they'll want to understand the project team. So particularly they'll be looking to get evidence of either experience, well, both experience in having delivered projects elsewhere, and if this is a first for the authority, then it'll be more reliance on the external team who are supporting. And also they'll be interested to understand what the governance structure is. So the experience is, can you deliver? You know, the governance is, what do you do if things start to go wrong? And that's a key aspect for investors to understand. And some of that might need to be worked out, but it's likely the existing governance structures of the authority should put you in good stead to provide comfort there. Then moving on to the construction. Oh, sorry, Sam, just for going on the construction phase. I think really what investors are trying to understand is what are the risks involved in successfully commissioning the project such that revenues can start to flow, either connection revenues or revenues from on provision of heat. I don't need to go into detail there. So next slide, Sam. There'll also be key to understand what's happening during the operational phase. I think our experience of investors experiencing this and similar markets where there's either energy generation or energy efficiency is that misalignment of incentives between the operator and the investor, I think, are important to address. I think when investors see that the operator isn't representing their interest, then there will be issues, the additional risk for them. So I think they'll be keen to see that alignment of interest being done, and that can be done through a number of ways. Either it's its equity ownership or it's through the incentives that are built into heat supply or maintenance agreements, that will be key to ensuring that alignment exists. An obvious key element of the investment summary will be an understanding of where does the revenue base come from, who are the customers, how much of that is a committed load, cornerstone heat load, and how much is anticipated or expected or hoped for. And here investors will be wanting to risk adjust what is being forecast in the investment summary, and so they'll be wanting to potentially undertake sensitivities on what if things don't go as quickly, or what in terms of build out and expansion. So it'll be important to lay that out in a way that they can understand. Next slide, which leads me on to this will all be summarised. The project will be summarised in a business plan that effectively seeks to bring the whole project together, sets out some forecast cash flows of capex, repex, revenues, and operating costs in a way that then can derive a set of cash flows that underpin the returns that are coming out of the project. Alongside that will be non-financial indicators alluded to earlier, that sort of ESG performance indicators, and in that investors will really be wanting to focus on understanding the assumptions and risks that underpin the kind of core cash flows, and typically a financial model can be a good way that allows sensitivities to be undertaken either in timing, phasing, rollout, or in sort of levels of capex or other variables. So that's a quick canter through some of the headings and the content that we were setting out in the guidance that's set out in Annex 2 to the overall guidance. So handing back to you, Sam, for any Q&A that's coming.
Thanks, Neil. We've had a few questions which I think I'll pass over to Richard. There's also a bit of an echo on the line. Apologies about that. Okay, so the first question is around eligibility. Would upgrades of existing heat networks be eligible via BEIS?
So unlike HNIP, there are no eligibility criteria in that sense for BEIS. It's there to fund heat networks, whether it's expansion of existing ones, recycling capital on mature networks, or financing new ones. So absolutely, BEIS would be available to fund upgrade of an existing heat network. Yeah.
Perfect, thank you. And another one here around the timescales. So do we have an idea of timescales for securing heat network delivery partners and finance using BEIS?
So we have put out in the back of the guidance and another of the annexes a sort of pro forma or template timetable. It really depends on the complexity and stage of development of the project, but in there we're sort of suggesting 12 to 16 weeks to go through the BEIS process, and the quality of the information you give out to investors will really drive the efficiency of that process. So again, understanding that due diligence requirements and getting the investment summary right, but it can be the process can be run through in a relatively short period of time.
Great, thanks, Richard. And are there any risks at all for some of the early local authority adopters of BEIS, particularly if they're seeking a concession model?
So I mean, I think George has already said, HNIP are sort of finding a way through on the concession model by working it through on some particular projects, and they don't have all the answers yet. So there is some uncertainty exactly what that concession model will look like. I don't think BEIS itself really is a high risk procurement. It's the route to the market of issuing an investment summary to investors is very tried and tested across the renewable sector generally. We've seen it being used on some HNIP projects very effectively. Investors know what they're looking for and what information they need. So I don't see it as particularly risky for early adopters.
Great, and I guess sort of linked to that point, is there a similar initiative to BEIS for other decarbonisation investments? You mentioned the process being quite tried and tested and similar. So are there other platforms that are being brought forward?
I mean, so BEIS has been put in place to raise funding for heat networks, but that doesn't have to just be the heat network elements. If there's private wire or other elements that are attached to that heat network project, then that can all be wrapped up in the BEIS funding. But it's not there to fund standalone EV or solar panel, and there's really well tried and tested routes to raising funding for particularly solar, and a number of funds in the market for EV.
Great. I think that those are all of the questions that we've had through so far that relate specifically to BEIS. Are there any closing remarks from yourself, Richard, before I hand over to Ken?
No, as I said, we're be delighted to talk to people on a one-to-one basis. So please do get in touch if you need further support.
Great, thank you. Ken, did you want to just close us off? Perfect.
Thanks, Sam. And thanks everyone. That's all but brought us to an end. I think we've heard some brilliant presentations this morning going into a lot of detail about BEIS and what it can do for you. I'm very biased. I think they're interesting. I guess the point is I hope you did too. Look, without the engagement of public sector projects, BEIS is just a very pretty shop window with a group of capable, experienced investors pressing their nose against the glass. Active investors, as John described to you earlier. It's there for you to use, to take advantage of, and we hope you'll be able to take advantage of very much more than just the money. We hope that in doing so, you'll develop your heat networks out in a way that will have a lessening burden on public funds. As Richard just mentioned, if you want to find out more, or better still, if you're ready to begin a competition, please reach out to the gents from Amberside. Take advantage of the fact that they're offering you these one-to-one conversations. Of course, don't forget our wonderful Triple Point business development managers as well. Lauren and Amy are available to take your questions on this or anything as part of your HNIP journey. We've got time for just one last very short question in the chat. Mr. G Southgate has asked the panel, should I keep faith with Harry Kane tonight, or is it time to give him a rest and try somebody else out? Mr. Southgate, keep faith with your captain. We've all got faith in you. Tonight, I am a very excitable Englishman. Last night I was a proud Brit watching Andy Murray. Today, it's my English Spurs that I'm proudest of. Thank you so much for your time and attention. Enjoy the football tonight. Keep fingers and toes crossed, and we'll see you very, very soon indeed. Thanks for your time. Have a great day.